Welcome to Homes and Loans. I'm Angela Jaspon, and this is our very first episode. I'm joined by my lender bestie over here, Colleen Mitchell.
Hi, I'm Colleen Mitchell. I am actually a senior loan officer for a direct lender here in Central Florida, and I work with clients to help assist their financing power to purchase a home or refinance.
So on this podcast, we're going to dive into a bunch of different things, all about homes, all about loans, because we want to be able to share tips with you to best educate you, and especially any, mostly luxury buyers for the most point, because they need to know all the advantages they have to leverage their equity. And so Colleen's going to walk us through a couple examples each week in each episode. But today we're going to focus on what's called the all-in-one loan. So let's start with that.
So the all-in-one loan is actually a proprietary product that CMG Home Loans offers. And the all-in-one is actually what we call a first lien home equity line. So basically it's a first lien home equity that is tied to what we call a sweep checking account. So as you make deposits into your checking account, it sweeps every night to your mortgage. So it's helping pay down on your mortgage quicker. So it's great, especially for investors or even a primary residence. You can purchase a home, take out what we call an all-in-one, which is a home equity, and every night that any deposits you make into that checking account will sweep and pay down on your mortgage, which in the long run, you will pay less interest on. Yeah. Every day, your interest is calculated. So once a month, you get a statement that's going to be an interest-only statement, but that interest is going to be based on whatever the current balance is. The other great product,
That's okay. Let's break it down for 1 second, though. Okay. Just let's make it super easy for people to understand, because I feel like this is a big misconception with this loan product.
Yeah.
I've explained it to people, and for some reason, they get lost in it. And once you understand it, it's so simple, but it's a different product than what people are used to. So this is where you really need to understand. So I'll let Colleen give a good example. But for example, if you have $500,000 in your account, you have a loan for $1 million, right, to purchase. You are buying a property, but you generally keep $500,000 in your checking savings account. How is that impacting that $1 million loan? That's kind of
right. So if you have money just sitting idle in a checking account, that's really earning no interest.
Yeah.
So why not pay down on your mortgage daily at midnight every night? Whatever deposits are in that account are actually paying down on your line of credit.
Meaning you're only paying interest on the balance. Of the $500,000, not on the $1 million. And that's what people don't understand, right?
Exactly.
Or it's great for investors, for example, because if they are depositing rents, it's being either they're paying less on interest. Am I understanding that correctly? So and it's paying down the principal?
It's paying down on the principal daily, but you still have access to that money. So if you need to write checks or use a debit card to pull the money back to pay your bills, home repairs, even purchasing another property, you always have access to your equity. And that's the benefit, is that you have the equity line to use when you need it, but you don't want to leave your money just sitting idle in a checking account. It could be paying on your mortgage on a daily basis.
So the other big difference, isn't there a big difference between how long, like a general equity line is how many years?
So a general equity line is usually 10 years.
And on an all-in-one,
this is a 30-year equity line. And it's interest only for the first 10 years. After 10 years, it will roll into a 20-year amortization until you get to zero.
Okay. So after the 20 years, after the 10 years, once it's a fully amortized loan, can you still draw on it as long as you have equity in it?
Yes.
Okay. So you can still use it as an equity line even once it's no longer
That is correct.
Interest only. Okay.
That is correct. Important. And the rate on it is a monthly adjustable, and it's tied to the secured overnight financing rate, SOFR.
You get that, people?
And the current index on that is 4.37. So then, depending on if it's a primary residence or an investment or second home, then you'd have an index that's added to it. So sometimes that rate could be higher than the fixed rate, but because it's interest only and it's sweeping from your checking account on a nightly basis, you're actually paying less interest in the long run.
But when does that calculate? Is that monthly? Is that daily?
The interest is calculated daily.
Okay.
And then the statement drops once a month. So then it calculates the interest for that 30-day period.
Okay. So, but the biggest thing that people need to understand is that in the grand scheme of things, if you are constantly putting money through your account and it's paying down the amount that you're actually paying interest on the balance, because if you have a
Correct.
balance of $1 million and you're running 500,000 just as an example through your account daily, then you're only getting charged interest on the remaining balance of 500,000. So think about the massive amount of savings that is for you because you're paying so much less interest. And then another perfect example is if you're just depositing payments, that is paying down towards your principal,
Correct.
not your interest, which is completely different than a standard loan that most people get where you're going to pay the majority up towards interest first. Correct?
That is correct. And then
Yeah.
you still have access to use that money if you need to.
I think that's the biggest thing that I think is great for people who either want to invest or, go up in purchase price because you
Right.
don't have to go get another equity line or refinance another property. If you have, say, $500,000 in equity in this all-in-one, right, then you can literally just pull it out like a debit card.
Correct.
You can wire the funds. You make the request, right? And
That
then
is correct.
you already have your down payment on another property. You already have that money to invest in a project that you wanted to invest in.
That's correct. I mean, it's not for everybody.
Yeah.
So if you're on a fixed income, it may
Yeah.
not be the right product for you. But if you are on commission, like we are, or any type of position where you may get large bonuses that you want to apply to your mortgage, the whole point is that why leave your money sitting in a checking account idle when you could be paying down on your mortgage and you still have access to that money?
Yeah, I'm just paying less in general in interest every month.
That's
I mean,
correct.
the amount of money you pay towards your standard mortgage interest
Yeah.
versus this.
I have an investor that has 5. So he
5
has-
of these loans?
Yes.
That's amazing.
That's our max on this product. You can have 5 at one time. So he's got 5 and he's an investor and it's been working great for him.
So tell me, on that investor story, that investor client, are there special guidelines for an investor for qualifying, or is it like your standard mortgage where,
So
do they still do
that's-
bank statements on these kind of loans, or can you
No.
have to have tax returns,
They
W-9s?
have to have tax returns, full documentation, but we do construction financing with that product now too.
Really? That's
So,
new.
Yeah.
Okay, so tell us more about the construction financing.
So it's
how you can use
if
it.
you have let's say you have a lot that you want to build a home, we can do a construction financing where you have a certain period of time to get the home completed, and we set the builder up on a draw. So you're interest only during construction, and then at the end of construction, it rolls right into an all-in-one product.
Okay, which it would be interest only during construction on any loan, correct, for building?
Correct.
Yeah, so
Correct.
it's very similar, except then you
Very
have
similar, but you have the
option.
all-in-one. And with the down payment amount, so if you're looking to buy a primary residence and use this product, it's 10%. Second home is 20%, and investors is 25%.
Okay.
So, and you can use this product to purchase or refinance at any time.
So, for example, for that client that you're talking about, is he taking the 25% from one of his other all-in-ones to purchase and use as a down payment and get a new all-in-one?
Yes, he has. Yeah, he has. One of them he actually just sold, so he's looking to do a 1031 exchange of buy another property.
Yeah.
So
Okay. And then there is a couple other things people should know about the all-in-one. For example, even when you pay it down, you can still keep it open. Right?
Correct.
It's like an open line of credit. So if you were to pay off that $1 million mortgage in this example, you would then have an equity line of credit for
you can
$1 million.
you can leave it at 0.
And
You can use
leave
it when you want.
Yeah.
And our max loan amount is $3 million.
$3 million is the max. Okay.
Yeah.
And what is there an annual fee to keep it open once it's paid? I think there is.
Good question. I don't know
I
the
think there is.
answer
We'll have to check on that. We'll have to get back to you on that. I'm pretty sure there is, but I think
there
it's
is.
$135.
Yeah.
It's something so minimal that for me, if it's under $500, it's usually worth it instead of going
Yeah.
through the hoopla of having to get another equity line or refinance another property when you can
Correct.
just have access to those funds immediately.
Exactly.
Yeah. So what do you think one of the biggest myths is about an all-in-one? Is it that it's more for investors instead of primary residents?
Well, yes,
or
I feel like it's
construction?
really good for investors, especially if you have an Airbnb. Like, I know you have one as well. And as you get those deposits on a daily, weekly, monthly basis, and you make a deposit into your checking account, it's paying down on your mortgage.
Yes.
So you're accelerating and paying that mortgage off much quicker. I think they estimate average is like 10% of your mortgage per year.
100%. So,
Yeah.
in full disclosure, I personally have used this loan, and I love it. And that's why I wanted our first episode to be about it.
Yeah.
Because I think it's just something that people don't understand fully, and they're really missing the boat on it. So I didn't use this product. We don't have it for like a primary mortgage. We used it for a secondary home investment property for this exact reason, because our plan was we own a beachfront property and it does short-term rentals. And so those rentals, every time we get paid on one of them, it goes into the account, it pays down the principal. So we're paying it off so much faster and paying less interest because we keep other, funds in that account. So,
Right.
but then if we have a repair to the property, we just pull it
Pull it
out
back.
and use it instead of using our own funds. We use that leverage of having access to those funds. So I love the product. I wish more people understood it, and we would love to answer any more
Yeah.
questions you have about it. So always feel free to reach out to us. I can give you my personal experience. Colleen can obviously give you all the guidelines in more detail. But yeah, I definitely highly recommend this product.
I think one of the fears that most clients have is that it's an adjustable.
Yes.
So as the Fed is starting to lower the short-term rates, that rate will be affected.
Mm-hmm.
So that rate will do nothing but come down going forward. So yeah, sometimes it is a little bit higher than the current market rate, but because of the features that this product offers, it's amazing.
So just like there are different products, whether it be an adjustable rate loan or a fixed, right, or an ARM, guidelines change, just like with loan guidelines changing.
Correct.
Right. So is there the chance that I know in the past, because when we got this loan, we were able to get it at a fixed rate.
Correct.
And so that product is no longer available. Now it has to be adjustable, which it was at the time too. We just had the option of choosing a fixed rate.
Well, you had a fixed rate for 5 years.
Yes.
Yeah.
So do you think it will go back to, will there ever be a chance, or do you know if they'll have the opportunity to do that?
I don't know.
Not at the current.
No.
We don't know currently. if
It's
they're
been
gonna
gone
offer
for a
that.
couple years and they haven't brought it back. So
Yeah.
I think we're going to be using
Staying
this.
with it,
Yeah,
the
yeah.
standard guidelines for it.
Yeah.
Okay. Okay. Well, primary residence, you said 10% down?
10%.
Okay. Up to 3 million. Just so
Up
we're
to 3
understanding.
million.
You can't do a no income doc, just so
No.
we're reiterating what everyone needs
Full
to know.
tax returns,
Okay.
pay stubs, W-2s.
The whole 9 yards,
Yeah,
people. I know it's not
yeah.
fun, but you got to do it.
Yeah, yeah.
Okay. Anything you want to tell them about, like, call you?
Yes.
You're the person.
You can call me. My name is Colleen Mitchell. I'm with CMG Home Loans, 407-620-3563.
There you go. And if you need to find the perfect home and, want to run some numbers on whether or not it's a great investment and what I think as far as, doing the all-in-one for that property, I'm happy to advise as well.
Yeah, and there's actually a great website that you
Okay.
can go to get more information on the all-in-one, and there's actually a calculator. It's called allinOneLoans.com. There's a lot of great videos on there, about a lot of testimonials from clients who have taken it in the past. So highly recommend you check out that website.
Yeah, great. Well, again, I think it's a really underutilized product. And again, not many lenders offer this product. So this is not something like if you call Bank of America, they're going to know about, or, if you call any regular lending institution that you're used to working with, there's only a handful of lenders that do this. And that's why we wanted to kind of bring more attention and knowledge to it. So, you're not missing out on
Right.
something that could be so much better for you.
Yep, absolutely.
Well, thanks, guys. We look forward to the next episode. And as
Absolutely.
always, feel free to reach out and give us your questions, or we'd love to help. We'll see you next time.
Have a great day.